Hello everybody, welcome to another video here on the channel. This is my Chart Annotations series episode 6. Some of the new concepts I'm going to cover is the London and Asia liquidity, which in my opinion really doesn't matter, the idea of fractals in the market, and position sizing correlating to the strength of the model. So if we go into Monday, this is Monday the 20th, this is last week. Right now this is at 5:02 a.m. You could see, starting off with the London and Asia liquidity, the London took out the Asia low, so this Asia high is still being exposed right here, and then we just created the London low right here. So basically with this, we can guess that this London low may get taken, right? 'Cause we're next to it, and this Asia high is to get taken, and this London high is to get taken. They're also close to each other, as you can see, so it's a higher draw of liquidity. So now, taking this off. Alright. So, secondly, if we look at the daily open, which, there it is. Let me delete this. So we started the day off here and we're trading above it, so higher chances are that we're gonna end the day below it, but also you want to look at a higher time frame bias as well with that. So if we look at the 4-hour here, which it's there's a lot of annotations, let me clear this. The 4-hour is extremely bullish because we are in this 4-hour fair value gap. We had a massive wick down, and now we're going back up. And we also tapped into this 4-hour fair value gap, and we're wicking up as well. So looking at this, it is pretty bullish that we're going to go higher. So this may not be that accurate. Okay, so going back to the 1 minute, bringing my drawings back up. Starting off the day at pre-market. And by the way, guys, I have these indicators right here. This is fair value gap by nephew Sam. This creates all the fair value gaps from the time frames 1 minute, 5 minute, 15 minute, and 1 hour, I believe. And then the ICT macros, which I'll explain a little bit. So starting off here, we create an SMT. My SMTs that I draw out are based off of ES. So ES and NQ, they both have divergences, and that indicates a reversal. And if you guys are new to this, I do recommend going to the first episode because I kind of explain all these older concepts in detail. But we have an SMT here. And so now that this SMT is created, this SMT TP is the target, and since we had a reaction off of this SMT being created, this low is protected, so we should not go back down to this low. And then right here, we enter this fair value gap. So first entry would be entering off of this fair value gap, or you could wait to see a reaction off the fair value gap. So right here, we're just sitting in it, still seeing it, and there we go. There's your reaction off of it, and we have another fair value gap created there. So then you could look to enter into there. So right here would be your entry, and then your stop loss would be at the low of this candle that creates the fair value gap, and then your target would be this SMT TP, which gets hit right there. So that would be a winning trade. And then you have this other TP up here that it could possibly reach. Do be careful though, because we do have this 1 minute or this 1 hour fair value gap that has gotten respected multiple times. So more structures just generating, and then this TP gets hit, and so now we're entering a macro. So the macro indicates a reversal. We are in an uptrend right now, entering into the macro, so I want to see us reverse and flip to the downside. So to do that, I want to see us close below a recent low and respect a fair value gap that we enter into. As you can see right here, we do close below this low, but we do not, we just run right through this fair value gap. So we're not ready yet. Then right here, we create an SMT, and this gives us a better confirmation that we'll head lower. We are out of the macro though, but we do have an SMT here. In addition to this SMT, we have also just swept this external buy side, and we had a massive rejection down. So I want to tap into the first fair value gap that we create. Also, this right here is a protected high. So now we had this reaction. This high should not get retraced back to, and we should head down to these lows. So right here, we tap into the fair value gap. Here would be your entry. This would be your stop loss, and we tap the SMT TP. All right, so now we just wait. So that's another winning trade right there. We take out the second TP, and we tap into this 1 minute fair value gap. And right after that happens, we have massive rejection up. We also do respect this 5 minute fair value gap that has been tapped into recently. So we get displacement up, and it looks like we're respecting this initial fair value gap. And we head straight up to this protected high. So the way this will work is when you have an SMT here, this creates a protected high, and then here's your SMT TP. After this SMT TP gets hit, the likely draw of liquidity is back up to this protected high. So that's exactly what happened. We came down, took this SMT TP, we then took out this low, reacted off a PD array, right, displacement up, reacted off a second PD array, and then we came up to take that protected high. So next target would be this buy side right here. Out of this fractal, we retrace to discount, and then we go up to take this buy side. So now this is going to be a little in-depth explanation of fractals. So first of all, you can see right here we have buy side and we have sell side down here. This entire thing, which I'm going to draw a box, or actually I'm just going to circle it. So this right here is an entire leg move down. So I'm going to draw this in green. So this is a leg down. And this is technically a fractal, right? This is an entire move down. But then inside of this move, you have a bunch of other smaller moves. For example, this right here, this move up, this move down, this move up, this move down. And you have all of these tons of fractals. And then going on a higher time frame, you have higher fractals and higher fractals and higher fractals. And then a model fractal is this, for example. This entire move right here, where we build all the structure, go down, form a low, we come back up, and we take all this liquidity, this is all an entire fractal. Then let's say out of this massive fractal, you could zoom in. And if you zoom into this portion of the fractal, you have another entire fractal where there's a bunch of other moves. So again, right here, here's liquidity. We form the same sort of thing as this upper fractal, and its entire setup on its own. Same thing as this part of the fractal, of this larger external fractal, we have another entire model right here. So that's kind of explanation of fractals, and they'll be more apparent once we get into the actual New York session. So now we just took out this external buy side. So now what I expect is to see a move down because this external is taken, and now we have all of this sell side liquidity. So first thing that happens, right after we take out this high, we get massive displacement down. That's very bearish. Then we come back up, we form this low. This creates an SMT, and then we come back to retrace into discount. Also on this leg right here, This is a massive white candle. This is a manipulation leg, drawing standard deviation on this. You got your 2 to 2.5 level, and then your 3.5 to 4 level, which, as you can see, this 4 level aligns perfectly with this liquidity. So we go down, we traced back to discount after hitting 2 to 2.5. And inside of here, inside of this bigger model, you can see a little smaller one. So right here, you have this SMT that gets created. Then we have displacement up. And after this, you can take an entry right here in this 1 minute for value gap, and you can potentially target the discount of the range. Because after this massive move like this, we're going to want to retrace the discount. So you can take a trade targeting that discount. Here's your entry, and we just go straight up to this TP. And it is possible that we could go higher, because this is an this is your SMT, this is your protected low. And in theory, this SMT TP should get hit before the protected low gets hit. So after this, we come down back to this 1 minute for value gap, just barely tap it, and we actually retrace all the way back up to this SMT TP. So you can take partials at this discount, right? Move your stop down to break even, so then you're not risking any money on the trade, and then you ride this all the way up and make bank there. So then we go even higher, and we take out this buy side, which is the finishing touch this even massive model, which is basically 2 days long, right? So now let's zoom back in here. So now that this just happened, I want to see a lot more structure before taking any sort of trade. So right up here, we have this SMT created. We also have a liquidity sweep of these highs and displacement down. So now for this, I'll draw standard deviation on this manipulation leg. And we have displacement down. So now looking into an entry, I want to see us go into a fair value gap, because this would be turtle soup. Manipulation of these highs, forming SMT after external is swept. We have displacement down respecting this SMT. We have a fair value gap here. Here could be your entry. You could put your stop at this high. And TP, you could take at discount of this leg right here. And this is also aligned with 2.5 on the standard deviation. We then retrace back up, and we make equal highs up here, but we tap into this previously respected 1 minute. Any 1 minute that's tapped to and respected well, if we go back to that previous 1 minute for value gap, we most likely will respect it again. So right there, we respected it. We actually respected it a third time here. And then finally, you would get stopped out in profit. So take your TP there. And right here, this 2.5 area was sort of the reversal. We also create an SMT right here at these highs. So this up here is a protected high. We should not go back up to here after we have displacement down. So right there, that massive red candle, that's our displacement down. So now we want to wait for a fair value gap and a tap into it. So right there is where it is. This will be your entry. Your stop would be at the top of this candle. And now we're entering a macro. So in addition to having this bearish SMT, we're also in an uptrend going into the macro. The macro should reverse us, so we should head to the downside here. And as you can see right this, like this, it is a massive sell-off. We take out this SMT TP, and we actually go down to this 3.5 to 4 area on the standard deviation from that previous manipulation. And then we go down, we take out this protected low, and we take out this sell side liquidity. Okay. So now, actually, do we take it out yet? There we go, we take it out. So now this model completely finished. So now I gotta wait for more structure to take a trade. This protected low gets taken. Right, more structure just generating. And usually when I'm looking to take a trade, I'm always looking for some sort of SMT. There's no SMT at these lows. There's none of these highs. There's nothing really to take here. We also haven't even got to market open yet, so we still have a long time. Okay, so now we're going into an uptrend into this macro, right? You wouldn't look at this. I mean, you can. That's why it can be a little difficult. You could think of this as a downtrend, and then we displace above this high where we make a market structure shift. We're tapping in this 1 minute. And yeah, that could be true, but going into this macro, we're in an uptrend, and it's also a smaller macro. So we'll just have to see here. So now I want to wait until a recent low gets displaced. So right here, this is your displacement. And it was actually a lot of displacement, so we're probably not going to get a retrace. Right here could be your retrace. But this is the end of the macro, right? Really quick. But you can see right here, the macro did reverse the move. And this right here is market open, so anything could happen here. We get a massive pump up. So we take out this sell side liquidity, and then we take out this internal sell side liquidity. So now this could be your manipulation leg that took out this low to head higher. This manipulation leg, the standard deviation projection of 3.5 to 4 does align with this previous protected high, and that is a massive, it is a really high liquidity target. So we have a massive pump up. We take it out right here, and if you did identify the turtle super here, you could catch this entire move. So now just waiting for more structure. You can see right here, going into this macro, we're in an uptrend. So if I was to take a trade to catch the reversal, I want to see a market structure shift. So going into the macro, we actually have a massive pump. It could just be a continuation macro. So this is the first low that gets displaced through. So I'd want to see a retrace to this 1 minute if I was to take a short. So here's the 1 minute. So let's say you wanted to catch a little piece of this pie, put an entry there. You could put your stop right here. This would be a 7.5 point stop, and then you could put your first target at this low, and maybe second target at this 1 minute for value gap. You know, you could put your targets wherever you're comfortable with, like down here, maybe discount at this range. But let's see where we go here. So we do take out this first TP. And you can also see that this is a fair value gap that got respected. So most likely we'll respect this fair value gap again, which is exactly what happened. So if I saw this, I would just get the rest out of my contracts and be in profit on this trade. So we just had a massive pump up right here. Retrace to discount. Still waiting for more structure though. I want to see an SMT created. So right here we take out this external buy side. Now this is on an absolutely massive model right here. So you can see as well the way the fractals work. The retrace will always want to go down to 50%. So right here we have this massive leg up. What do? We slowly retrace and we respect this 50% level. We buy back up, take out this buy side. What are we going to do now? Retrace to 50%. And now going into this macro, I want to see some sort of reversal. So we are in an uptrend going into the macro, and I want to see us possibly reverse to the downside. So right here, we just have an absolutely massive sell-off. So the macro did work beautifully. This low just got taken out, so now I want to see some sort of retrace before going lower. Here's a fair value gap right here. Personally, me, I would want to see it retrace to discount to better my risk. So maybe this 1 minute fair value gap. Sometimes it doesn't happen though, and you miss the whole move. So right here, we took out this low. This would have been your target. So if you did enter in this 1 minute, which is the first 1 minute that it tapped, you would have won the trade there. And this 1 minute probably could be probable because all of this accumulation right here is sort of like an order block. So we come down below it, we tap into this accumulation level. So this is an area of resistance. We form this SMT at the bottom here, and we tap into this 1 hour for value gap. All right, so we create this SMT. Is this something I missed right here? Oh yeah, right here in this macro, we did a reversal, tap this to TP. I didn't really notice that, but we have this SMT down here. So now with this SMT, this is a protected low. I want to see this high get taken. So we come up and we form an SMT right here. So since we formed this SMT, that actually means that on the other hand, ES actually took this high. And since ES took this high, that means NQ doesn't have to take it. So if we form an SMT here, or you're looking at ES while you're trading this and you see ES took this high, then I would get yourself out of the trade, because right here we may reverse to the downside. So as you can see right there, we get a massive sell-off. And this SMT created right here shows that this SMT TP wants to get taken, and that this is a protected high. So we come down here, and we're also entering into this macro, but you can see ES takes this low while NQ doesn't, forming SMT. And we're into this macro. We have a downtrend going into the macro, so I want to see some sort of reverse to the upside. Here's our massive displacement up. We almost tapped this fair value gap, but we have another displacement up. So we have a fair value gap created right here. Looking for an entry to go into that fair value gap. We get a massive buy up here, and then if we mark discount of this range, this fair value gap is in discount of this leg right here. So this would be your entry. You'd put your stop probably down at this low, just because this fair value, this is like such a small stop loss. The stop loss would only be a point. So I would put it actually at these lows. Now we tap discount, entered into this. This macro has reversed this to the upside. Retrace to discount. I do want to see a move higher, possibly. So here's our move higher. We form another SMT here. As we form this SMT, we are into this 1 minute that has previously gotten respected. So now I expect us to move up to this high. And right there we move up to the high. We actually take out this protected high as well, and then we also take this protected high out. Right, so this is a beautiful model right here showing you see this SMT, you have this lower SMT here, you have this big SMT, and then you also have this 1 minute for value gap, retrace to discount. All of these things are lining up. This is where you would put on more size in a trade. This move right here, trailing your take profits and just letting your runners run. This is how you make your most money with your trading. So we're just keep going higher. Now we form this massive SMT at these highs. So now that we have this massive SMT and we have an uptrend going into a macro, I want to see us possibly reverse to the downside. So right here, we create an SMT up at the top, which is very bearish. That's good for our bias. So now I want to see us displace down. Right there we displace down. And I want to look to take an entry into a fair value gap. So we missed this fair value gap. We have another one right here. So this fair value gap gets tapped into. And this would be your entry. Your stop could be at this high. And I want to ride this down until I want to see where discount would be. So discount of this leg is right here. So you could trim your first take profit at here. So actually this low is where I would take it. So first take profit could be right here. We do take that. Second take profit, I probably would put it probably up at this right here, because this would be considered a breaker. And price does usually like to bounce off of breakers. In this case, it didn't. It actually came all the way back down to here. Oh yeah, and we have another TP down here as well at these equal lows. This would actually probably be the best TP. So we take this final TP. Your actual final TP would be this low. But after we take this, just a second here, we form an SMT at these lows. So now that we have this SMT at these lows and we have this bigger SMT now created, I expect us to go back to the upside. So now I want to look to trade, to go to the upside. Something that happens here though, we create this SMT up here. So this is going against our bias. We're also tapping into a 15 minute, a 1 minute, a 5 minute for value gap, all of those combined. And we do have these stacked lows right here. So chances are these SMTs will get disrespected. So this will be your SMT TP. We get a small move down, retrace the discount. After we retrace the discount, we finally go down, take out all these protected lows, and then we form another massive SMT at this low. Now that we did that, I want to see this protected high get taken. And we have this SMT down here. So this is pretty bullish. We have a small move up, retrace the discount. Moving up here, this is where we just took the protected high. We're just slowly going up. Okay, so right here, we have this 1 minute that's gotten respected in the past. We come back down to the 1 minute, and we respect it again. In addition to that, we respect this lower 1 minute, and we respect discount. All of that is showing that we're very bullish. So just these concepts alone, in addition to this massive SMT at the bottom. And since we have this massive SMT that's kind of like an external SMT, we have this 5 minute right here that we're tapping into, which is an external time frame. So I do want to see a respect of all this and for us to get a pump up. So right there's our pump up. And we create this 1 minute. I'm looking to take an entry in the 1 minute. There would be my entry. My stop would be honestly at this candle's body low, because this candle's low is a little too low. This would only be a 1.25 point stop. So I'd put it at this body's low. First TP, you could take at this high. You could take another TP at this high if you want. It would not be that good of a risk to reward. But also we're entering in a macro soon, so keep that in mind. So this macro, I do want to see a possible reverse because we are in an uptrend going into the macro. So we have this 5 minute for value gap that we respect off of, so we're still going higher. We take out this other TP, which is up at this 1 minute. So since we have a 1 minute up here, way up here, it is possible that we will respect it. So that could be a TP. As I go up there, that should be there. So now we have these this double SMT. So SMT from this high to this high, and from this high to this high. Then we have a move down. I want to see us tap into a fair value gap. So we take out this SMT TP, retrace back up into this 1 minute for value gap. This can be your entry. And since this is also aligning with the macro, I want to see us head lower. So right here we're heading lower. This could be a TP because this is at this low, which is also right at discount, and it's also aligned with multiple of these 1 minutes and this 5 minute. So now we're in discount. I would probably basically be all out of my position here. We get a massive pump up right here, and we create another SMT, and we also tap into this 1 minute. So just like we tapped into this 1 minute way up in premium of this leg, we also tapped in the 1 minute way up in premium of this external leg. So this is just showing you this fractal right here, where we had a leg down and then we bought back up. We had a leg down, took out liquidity, bought back up. The exact same thing happened right here. We had a leg down, took out liquidity, bought back up. And now we're forming a 1 minute fair value gap, or we're forming an SMT. After this SMT, we have displacement down. This will be your SMT TP. So that gets hit. And now it's 4 o'clock, so we should be done with action. Another thing to keep in mind as well that I say at the end of most of my episodes, we form this SMT right here, and it's 4 o'clock. The market closes at 4 o'clock. So after that, usually action is very slow, and it doesn't go anywhere because the market is closed. But notice how we have these big candles that are obviously going towards something. If we have like this candle right here, and especially this candle, it is almost guaranteed that this low is going to be taken. Because before market closes, the market makers, they want to take out this liquidity in the last couple of minutes after the market close. So just like that, we take out this sell side liquidity. So now let's go ahead and review some of the models. So these are a couple of the models that was in today's action, or in Monday the 20th's action. So first one we had here, we had an SMT at the low. Here's your SMT TP. Here's your protected low. After the SMT is created, massive displacement up. We tap into this 1 minute, respect it. This would be your first entry, and then after this would be your confirmation entry. So if we respect this and have a pump up after hitting this 1 minute for value gap, this shows you that the model is in play and that we're going to go up to this high. So we get another retrace to this 1 minute, which sometimes it is apparent, sometimes you do get it, sometimes you miss it, most of the times you will miss it. But you have to be cautious when you're trading. So if it does go down here, that's where you can take your entry, bought right back up to there, and it also took out this liquidity. Right after that, you have this buy side SMT. You take out external buy side, form an SMT up here at the top. These equal lows would be your SMT TP, and this 1 minute for value gap would be your other TP. You could see massive displacement down. This 1 minute would be your entry. Stop loss at the top of the fair value gap. And then, so then after this, we have, move this all the way, what is this? Get out of here. Okay. We have an SMT down here. Actually, hold on, let's look at this from the beginning. So, tap discount of this leg right here, take out this buy side, and then we have this mass, after the buy side's taken and we form this high, we have another massive candle that takes out this high. This is your manipulation leg. And then we have displacement down. We form this SMT, and then after we form the SMT, we get a candle up, right? And we also tap this 2.5. This could be a reversal point. This could be an entry right here in this 1 minute. Stop at the bottom of the 1 minute candle, and we buy all the way up to take out this buy side liquidity and this buy side liquidity. Then we have this model right here. This is a turtle soup, a good example of one. We have liquidity up here. We swipe it and take it out, form an SMT, displacement down. Then we have this 1 minute right here. We tap into the 1 minute. This is also a manipulation leg, so here's your standard deviation projections. Tap into this 1 minute. We head down to this 2.5. And now of this entire leg that's previous before, we tap discount, we buy back up, we form another SMT up here, and after that, we get another sell model. So we displace to the downside, enter another fair value gap with an entry here, Stop would be at the top of this candle, and we sell all the way off to this protected low and buy side liquidity. Or this is supposed to be sell side liquidity, not buy side. Another one here. If you have this SMT down here, displacement up, right? Here's your liquidity target. This is an SMT TP and also protected high at the same time. We come up most of the way, we come back down, tap into this 1 minute right here, which is in discount of this leg. There's the entry right there. You can also see we respect it multiple times. We create another SMT at this low, get another displacement up. We take out this SMT TP, this protected high, and this protected high up here, which I'm going to go back to this to show you this again. So, was it right here? I think it was right here. So, this SMT's actually, is it there? Oh, it's right here. So we have 3 of these SMTs. We have one SMT where their high, with the high is the highest, right? This first SMT, this is the highest high. The second SMT, this is the second most highest high. This third SMT, this is the third most highest high, right? The lowest high. So this SMT right here shows we want to go up here. This SMT right here shows we want to go up here. This SMT right here shows we want to go up here. This SMT, and you can think of it as a sort of like a wedge squeeze. You have this form, this 1 minute right here, and this one leg alone takes out all the take profits of all 3 of the SMT models. So, got only a couple more here, guys. We got this SMT at the top here, and then this macro takes us down. Okay, this macro takes us down. I wonder if there's actually... Let me do that. Okay. So, here's an SMT displacement down. And then we retrace to the first 1 minute that we tap into. Could be an entry right here. We sell all the way back off to take a TP right here. And then after that happens, we form a little small SMT. This would be your SMT TP. We buy back up. ES takes it, but NQ doesn't, so this would be considered taking it. Again, here's another SMT formed though. And we end up selling off, after this liquidity sweep, we end up selling off to take all these protected lows, right? And then right here, we have a leg up, retrace down to discount, and then we have a rejection, or we have a reaction off. Entry could be in this 1 minute, come back up here, right? Take out this TP. Final slide right here, we have this SMT that takes out this TP right here. Displacement down, here's the first 1 minute that you tap into. We move all the way back down to this TP, tap discount of this range, buy back up into this 1 minute, form another SMT right here, and we sell off down to this SMT TP. So that's finally all I have for this episode 6 of my Chart Annotations Review Series, and hope you guys got a little bit out of it, and I'll see you all in the next one.